Welcome everybody to Markonomics 101 presents Hoot Loot, the place to be informed, be amused, but never be misled. Today's show is called, will 2021 be a money train, a crazy train, or a train wreck? Please like and subscribe to us. If you like what you heard, you're going to hear the truth here, whether you like it or not. Not in the financial media, only in Markonomics 101 do you hear the truth. Only on Hoot Loot. All right, everybody, we're going to go to the charts, and you know the charts tell all. So we start with the long term here, and this is the Standard & Poor's 500 from for the last 20 years. This is in a massive, it is forming a massive top. It's going to be a century type top, 1 in a 100-year event, and we're going to show you exactly why, how much the market is overvalued, how much pain people are going to suffer in 2021. I guess I'm giving you the answer. So Standard & Poor's right here, which is the large cap index, the big index. Notice this is called a reverse wave, 7-point. These are always reversal patterns. It does not look good. It will eventually come to a close. It's probably sooner rather than later. Let's take a look at the Nasdaq. Look at this thing. Let's look at this thing. The Nasdaq. Look at the rally in the Nasdaq. That curve, the parabolic curve that you see here over the last 12 years. That enormous bull market that has gone on, the longest in history, the most profitable in history, and it's in a parabolic uptrend line, which, as you viewers, long-time viewers will know, is death, and it means things are going to come crashing down. The last time we had something even close to this was in the dot-com bubble. In the dot-com bubble, investors lost 85%. Are you holding these stocks now? You prepared to lose 85%? Keep holding, because that's what's going to happen. It won't happen all at once, but it will happen. So anyway, we're going to go on to to some of the sort of shorter term charts. We want to start with the big picture in general, because the big picture kind of sets the stage that we are really at the, this is the ninth inning, bottom of the ninth inning, and one out left or something. The Dow also is in a bearish ascending wedge, a bearish flag. It just looks like it's ready at any time. You saw it kind of break there on Friday, and this thing, it could happen anytime now. So the Nasdaq 100 also. Notice that this thing is right at the support line. It's made a bearish ascending wedge, and as we know, it's not a good thing. So the tech stocks are starting to get slowly out of favor. We're going to show you a little bit more about that on our shoot on Monday. Monday, we're actually going to go through these stocks, all the stocks, and tell you how they are leading the market in which way, and where to go and where not to go in this market. Right now, if it were me, I'd stay in cash. As a matter of fact, I am staying in cash, so it is me. I am taking my own advice. Okay, so let's go on. S&P 500, honestly, not an interesting chart. I don't even want to waste time talking about it. That's for 1 year. This chart, however, pretty interesting. This is a small cap index. This shows that there is a lot of speculative interest. Right now, what we have in the marketplace, and I'm sorry to say this, but this is dumb money. This is not professional investors chasing these kinds of stocks. These are new retail investors that have just gotten, the gambling, the greed bug in them, and they set up accounts at places like Robinhood, and that are basically just catering to dumb money and people who want to get rich overnight, which never happens. I can tell you for a fact, it's easier to get poor overnight than rich overnight. But Standard & Poor's 500, or the small cap index, is a damn good sign of speculative interest. This is a transportation index, or as we call it, the Transgender American Index. And what you'll notice here, again, transportations are very correlated to the economy in general. And what you're seeing here is a reversal pattern. And these things, and a lot of the major companies that transport goods around, are starting to form tops. And we'll show you a lot more about that, again, on Monday when we talk about individual companies. So let's go on here. This is gold. Gold is poised for a massive breakout, but not maybe yet. It has to stay or bounce off of green support line that you see. And that green line, it's pretty much the Maginot line. It either breaks it and takes another leg down, or it doesn't. Right now, as bullish as I can be on gold and silver and precious metals over the long term, short term, they're not looking so good. People are too excited about them right now, I think. And so, be prepared to, kind of pick your place as to when to get in. And we'll tell you exactly when that is going to happen. Silver. Silver's actually looking a little bit better. Silver has looked better the whole time. And notice that it is still above its rising trend line. And it actually looks like a pretty good pattern, even though it's kind of traded poorly and some of the miners have broken down. But silver in the long run, this thing, silver's at $25. It ought to be getting up to about $250 in about 5 to 10 years. And I'll tell you why. And we'll show you why. The dollar index, here's another thing. This is why we're having a short-term pullback. The dollar index is it's made a bullish descending flag, and those tend to be signs that the downward pressure is starting to peter out. I think what's happening with gold, in all honesty, is that the people who are not investing in precious metals are the ones who are buying Bitcoin, and we're going to show you that in a minute. First, we're going to go 30-year treasuries. We've talked about interest rates. They are going up. Whether you like it or not, they're going up. The Fed can do nothing about it. And as a matter of fact, the Fed may have lost control of the economy. I think I said that in the dollar slide. But I'll tell you this. The dollar going down means that the Fed's only weapon is getting less potent. So that's 30-year. These are the 10 years. The 10 years also breaking out. They're going higher at such low rates. Be careful here to not be negative interest rates or to not be short. Or actually, you'd want to be short bonds, not long bonds in an environment like this. And that goes for mortgages. Get them fixed. Grayscale Bitcoin Trust. Look at this thing. This is the epitome of dumb money. Okay. Now, yeah, there are a lot of people that will tell you Bitcoin is valuable for this reason or that reason. And it really does have value. It actually does. We could talk, we'll have an episode, we'll have a show about it where we actually go through why it's valuable. Do you know it's valuable? Most people don't, yet they buy it. Why do they buy it? Because they're chasing momentum. When you chase momentum, you have to buy low and sell high. You can't buy low and sell high when something is already gone up 300% or 400%. You can't. So at that point, you stay out of the game. You don't want to be buying at the peak, looking like an idiot when the thing, you'll be the last guy holding it. You just don't want that. And that's happened to me enough times in my life. I've experienced enough of those heartaches to tell you it's no fun. But Bitcoin right now, $1 trillion market cap it's approaching. Unreal. This is the bank index, major sector of the market. The bank index, these are basically the major banks like Wells and Bank of America and JP Morgan. And these are still healthy, but we'll see. We'll see for how long. They're still healthy. They're still doing well. The broker-dealer index, looking good too. There are so many IPOs coming out, and they just make a fortune on IPOs. They call them unicorns. Unicorns are IPOs that come out with an implied market valuation of $1 billion. Apparently, there's been, in the last year, something like 20 of them, and we're coming up on a full calendar of a huge IPO offering. The places like Goldman Sachs are going to mint money this year, so that's why the broker-dealer index is going up. And they're going to sell you anything you're willing to buy. You're willing to buy it, they'll sell it to you. And it'll have a great story behind it. It just might not make any money, and it might go down. So be careful. Semiconductor index, this is a very, very important indicator of the economy and of the Nasdaq and of technology. Why? Because semiconductors go into almost everything. They now go into cars. Cars are now computers with wheels more than they are actually machines that actually run. Look at something like a Tesla. It's actually run off of software and wheels. It really doesn't have the kind of motor that we're used to having, we're used to seeing, and repairing one is done remotely, believe it or not, because it's a computer. You have to reboot the software like you do at home with your laptop or your phone when it goes fracata on you. So, but these guys are important, but they're also going up like crazy. They're selling at incredible multiples. This is a competitive business. It is going to grow, but again, buy low, sell high. Not here, not possible. Biotechnology index, gee, I guess the flu is good business, good for business. I don't know how many vaccines there are to COVID-19. I think last time I heard it's about 100. Every country has a different one. Pfizer has a two-part vaccine, so you have to take it more than once. Some have different vaccines for different reasons. How do you know if you're getting the most effective vaccine? There are all kinds of reports of people dying or people having side effects. Who knows? The statistics cannot be relied upon. That's a key thing. You cannot rely upon statistics that are not individually observed, individually measured, or have some veracity to them. And that's the problem here. We just have absolutely no true data to work on. So, what we got to do is look at charts and look at the information that they tell us, because information is power in this game of trading and investing. The more information you have, the more you know how to use it, the better you'll be, more successful you'll be. All right, the next one, here's Big Pharma. They don't mind a nice little round of, seasonal weather, as they call it. Big Pharma also in somewhat of a bearish pattern, but, they're certainly happy right now. They're all trying to make vaccines. They're all getting paid plenty for it. They're all expecting these vaccines are going to be approved, and they're all going to be forgiven for all the deaths that occur from them, probably because, they've been given sort of a blank check to just go ahead and do this. All right, so Homebuilders. Homebuilders, it's amazing to me that the Homebuilders index would be going up. The only reason I can think of is because there's so much money around, and that the dollar's going down in value and appreciating the price of homes. For example, a house has the value of a house, or any kind of residential real estate or commercial, is going to have to do with the cash flows, which has a lot to do with the interest rates, and it has a lot to do with the rate of inflation and the appreciation of the real estate itself and the cash flow. Once interest rates go up, you have that working against you. The dollar going down is working for you. So real estate's going to be kind of in the middle. Home builders, though, I heard a sort of an unverified report that all those millennials that love to sit in their basements and smoke a little doobie and play video games. Apparently now they're building multi-unit video game basements for millennials who have no jobs. So that may be the reason that home building is going up. I don't know. Just speculation on my part, purely. Here we have the S&P Retail Fund. Look at this. I guess those checks those stimulus checks have already been spent, or maybe they've been spent, or they've been pre-spent before they've even been received. Because why on earth would retail be going up right now? It's 70% of the economy, and the economy is not really growing that much other than catching up to where it used to be, and it still hasn't done that yet. So there's really no reason for these to be up here, except for the fact that they have a virtual monopoly. But there is a place that you can make money. You do want to buy low, you do want to sell high. Where can you do that with opportunity? Believe it or not, the pot sector, the weed sector, the hemp sector, the cannabis sector, the joint sector, the doobie sector. Oh, sorry about that. I got a little bit too ahead of myself. But this is now going to be Aphria, the biggest company. They're merging with a company called Tilray to form the largest cannabis company in the world. And look at what has happened to Aphria. Aphria Tilray is now will probably in all likelihood combine. There's a deal on the table. There's no reason it shouldn't combine, because it's a good deal for both companies, shareholders, that is. But what you see in Aphria is basically a parabolic move. The right thing to do, at least what I did and what I would have suggested people do here, is just on Friday not sit with the long position in something that's parabolic like that could open down 3 points after a 3-day weekend based on some news. You don't want to be exposed to bad news over a weekend and just caught with your pants down, which I've been on several occasions, and believe me, that's no fun. So this is one where you take your money off the table, where the table takes the money off of you. That's all there is to it. Be happy you made a profit, put it in the bank, hold cash, take the stress off, and get ready for your next trade, okay? So Aurora Cannabis, same thing. This company has formed bullish triangles after bullish triangles. It's come way down. All these pot companies, all these weed companies have gone down like 90%. And you have an opportunity with not only to get into an industry that is going to be now legalized federally, most likely, is legalized in Canada. And right now, it has growth potential too, because the uses of marijuana and hemp and cannabis oil and all the things that it produces, they're growing. Plus, with the stress that's going on right now in the world, not that I feel any stress, but most people right now are kind of a little stressed out about things. I don't know why. Everything's so wonderful. But, people do light up to kind of relieve stress. And I have a feeling that there's going to be a lot of need for that, especially because it's organic. And, to my knowledge, there's never been an overdose. So there may be not only an organic growth, but a growth in uses. So you've got two areas of growth. Plus, as the United States goes legal, okay, it's only one of a few countries that's legal. Okay, so there's all the rest of the world to go legal, and bet your bottom dollar they will. I bet you they will. And as that happens, that's what I think investors are anticipating here, that there's going to be just a massive legalization, and these things are going to go sky high. First, you're going to have a little pause in all likelihood. I don't think it's going to go much higher. It might. We'll see. Next one, Hexocorp. This one here, I wrote, don't fear the reefer. Like the Blue Oyster Cult song, baby, don't fear the reefer. And Hexo, look at that. Cross 525, closed 725. You made 40% in a week. All right. So, unbelievable move. Take that to the bank, cash it in, and be grateful. Be grateful that you made money on a trade. That's discipline. That's what you need to do. Bank your profits. Take them in, even if they're small profits. You can't go broke with a small profit. Nothing wrong with that. Tilray, my favorite. And I'll tell you why. Look, this is the weekly chart of Tilray right here. Look at how high this thing has gone. This thing has been as high as $300. It came out at 20, and the initial offering, it just crossed 20. It traded as low as like $6 a share a few months ago. So this thing has massive upside, especially combined with Afria. This is a great odds-on favorite as a long-term hold to make people a lot of money, or trade to make people a lot of money. But it's going to be choppy and volatile, and it's going to be treacherous trading. So be very careful with these companies. Canopy Growth, again, one of my favorites. This is now the second largest marijuana cannabis company. It is 30% owned by Constellation Brands. I've mentioned that. The largest distributor, or a large distributor of spirits and alcohol and all that. You add Tilray to their distribution network, or I'm sorry, Canopy Growth to their distribution network, and all of a sudden they've got instant distribution at just about every retail location where alcohol is sold, which is pretty much everywhere. So that's a reason that this thing is likely to just zoom. All right. And lastly, the Shanghai Stock Exchange. I only put in this because it is so different. While the Shanghai Stock Exchange, believe it or not, this is actually a buy low, sell high situation. The Shanghai Stock Exchange is down something like 40 or 50% in the last few years, and it's like the Wild West out there when you invest in Chinese companies because of the reporting and all that, and the potential for fraud and all that. But nonetheless, this one's breaking out, and this is very healthy for China right now to be breaking out. So with that, I want to ask you again, please like and subscribe. The button's right up here, or right down here, or right over there somewhere. And please hit the notation button, or the notification button, and we'd love to see you back. We're going to do another version, we're going to do the second half on Monday, because a lot of news is going to happen over the weekend between now and Monday, and we want to give you the latest information and some stocks to maybe look at buying or not at certain levels. With that, great seeing you back. We love you guys. Keep that fan mail coming in, and have a great weekend.